Today, I'm going to show you my perfect setup for a demand and supply forex trading strategy. Now, this strategy is very good for beginners and also very good for small accounts. So if you are a beginner and you have a very small account and you intend to grow it, one thing you are going to benefit from is this type of strategy. The failure rate is very low, which means that you win more than you lose. Remember that every strategy that you are going to be applying, you must have losses. However, your win rate should be higher. So for this, you can have a win rate of up to 70%. And what makes a lot of beginners and people with small accounts to blow their accounts is lack of patience. And I'm going to tell you why. I will show you these things. What I am going to show you is not the regular way that people trade it, where you just fix a buy limit order. I don't do that. So this is how it goes. At first, you are going to pick a point where price has reversed before. So pick a trend. We are in an uptrend. You can see it over here. We are in an uptrend represented by these new highs that are being formed with retracement or pullbacks, then new highs, hesitation around here. A new high was formed. We have a pullback. A new high was formed. But you will see that price at some point may want to fall backwards again for an uptrend. It may want to fall backwards again. Every swing low is a possible demand area. Every point where price reached and began pushing up to go and break a high, such as this is a high, this is a low here that pushed up to go and break the high that is here. This is another low that pushed up to break this point and move up. This is another low that pushed up to go and break this other point that is here. So each of these lows in an uptrend, it is lows that you are checking for as a demand zone. Whereas in a downtrend, you are checking for the highs. I will show you the downtrend if you stick with me to the end of this video. So every possible low here, this is a low, it is a demand zone. Is a demand zone. This is another swing low again. Over here, this is another demand zone. Okay, now remember, it is a zone, it's not a perfect line where you think as if maybe when price reaches that place, as if you are measuring it with a ruler, that it must reach a particular point. That is why they are saying a zone. I won't tell you how wide your rectangle will be, but I am going to tell you when price is approaching that level. I am going to tell you when you will go in. So just stick with me in this video. You will understand how to use it, and I will show you why you are frustrated in forex, and I'll also show you why you can't grow that small account that you have been blowing. The reason, I will give you the reason, and if you stick to it, you will see that you have a high win rate. This is a very perfect demand and supply setup. So you are going to see how it works. So if you have drawn this rectangle that you are seeing, you have drawn it. It doesn't matter the size, but I will come and tell you when it will take effect. So as this one as well, it shows each swing low that you are seeing is a possible demand area. This low again came down and then pushed up to go and break this. So this is another possible demand area. Okay, this is another possible demand area. You draw it like this. This is how you go about this strategy. So I have shown you now how to draw it. At what point will you draw these particular rectangles? You are drawing them on higher time frames. So if you are a day trader, draw it on 4 hours. So you pick your swing lows on 4 hours. You are going to be drawing, but your entries are going to be on 15 minutes. So if you are a scalper, you are going to 1 hour as your higher time frame, and then you go down to 5 minutes. You use it for taking your entries. So I am showing you for a day trader, go to your 4 hours and draw these points, and then go to your 15 minutes and take your entries. Some people may think, okay, it's about order blocks. This is a demand zone, is not about order blocks. Okay, sometimes you could have the fair value gaps and the other blocks there, but we are not trading other blocks here. So if you are to look for it, it's just a zone around which price pushed back up. So for an uptrend, we will pick these lows, any swing low. So when price reaches that point, you've seen that price pushed up, it tried coming down, it had to push up again. Price pushed up, it was retracing. At a certain point, it pushed up again. So you know that when that price tries coming down again, by the time it reaches that same level or zone, there is demand for that asset. So it will be pushed up again, as you can see what is happening over here. So I have shown you how to draw it using your swing lows. This is a low, your swing lows, your swing lows. Now, even if you don't get the perfect drawing of this rectangle correctly, with this perfect setup that I'm going to show you, you will know how to do it. They are there just to guide you that price is approaching that level, but you are not using the rectangles to take your entries. So I will show you the setup to use on your small account. And as a beginner, when you have that patience to stick to this, you'll find out that you will make more profit than losses. So now we will go down to our 15 minutes time frame to check for the levels, each of these levels. So the point that we are seeing now is this particular level where price returned back. Okay, so we are going to go to the next level. Now, before we go to the 15-minute time frame for our entries, I want to show you the reason why you blow that your account. Okay, pick this part. For instance, price reached this level. After retracing, it was pulling downwards, pulling back downwards into this level. It was pushed up. Price came down again into this level, and then it was pushed up. What makes you blow your account is the gap. So let me just remove some of these things here. Let me remove some of these things here to show you what is blowing your account. Good, so that you can have a clear entry. Now, what is blowing your account, or what is making you not to have profits in forex or become profitable in forex, is this gap that you are seeing. From the point where you started drawing this demand zone, this is a demand zone because we are buying. From this point, look at the date. It was 28th of May. 28th of May. This time gap that you are seeing to this point where the price came down, came into that zone, this range of time to 10th of June. So this range is what made you to blow your account, because you have no patience to wait for that market to come back into this zone again. It's doing you like it will never come back again. So you will be desperate. You will want to just take trades even when instead of you waiting for the market to come back into your zone. You see, what is frustrating is that if you are using $10 and you have to wait from 28th of May to 10th of June, look at it, for market to come down into your demand zone, that's almost like a month or 3 weeks. You can see. So you don't want to wait for 3 weeks to trade a $10. That is the reason why you are frustrated. But if you see that this thing will take you years, if you don't have money, it will take you years. Because if somebody has a $10,000 account and he has to wait for 3 weeks to take an entry, he can risk 1% of that, which can be like 100, to get 500 times 5. Okay. And that will be something that is worth it. If somebody has 100,000 account and you are going to risk 1%, which is 1,000, and you are going to get 5 times that amount, that is like $5,000 for 3 weeks. That is good. But you see, your issue is you have a $10 account. It's not feasible for you to wait for 3 weeks. So it makes you to be entering trades because you want to be growing that money every day. That is not how you succeed in trading. If you are doing that, you will keep running in cycles for 1 year, 2 years, 3 years, 4 years until you get frustrated and you will leave. So you see this time frame, this gap that exists for you to wait for that entry. That is your problem. That is your problem. So let's go down to our 15 minutes right now. So we are going to go down to 15 minutes. I'm on 4 hours so that we will see how to take entries. Go to 15 minutes. Let's go to 15 minutes. Okay, good. So remember our demand zone. Let me just show you our demand zone. Okay, this was the first time that price was pushed from this point, and it was on the 29th of May. So we are waiting for price to come back into our demand zone. Let me just show you something to see how clear this setup is going to be. So this is what price was doing. It will come down. It started pushing down here. You see it. It will push down, break a structure. It will go up, break a structure. Okay. It came over here, did as if it wants to break another structure. Now, this is the problem. This is the problem that people also have. You see, over here, there is a change of character. There is a change of character here. There is, okay? Because market was pushing downwards, pushing downwards, pushing downwards. This push down that you are seeing is a retracement because the main trend we saw was an uptrend. So we are waiting for it to get to this point. But the moment people saw that, okay, it was coming down close to this, but it has not entered your zone. It has not even tapped into it. And then a change of character occurred. So a change of character occurred around here. You will just jump in that, okay, market is ready to start buying. But when you ask yourself, what happened to this gap? What happened? Has it entered into your demand zone? No. So what gave you that confidence to think as if it has actually tapped into this for you to enter at this point? So the market will hit you because the market is not ready to buy. It's not ready to buy. Sometimes even if it continues buying, you should let it go. That is one thing with forex, letting go of something that does not meet your setup. Okay, but if it meets, it should come into this zone before a change of character will occur. So we are going to continue waiting for this market to come in. It came down. The whole of these things that you are seeing here, it has not broken the low it has not broken the low. It's here that it came and broke this low. So this is where the real thing, the whole of what was happening here is just to accumulate, to range and gather liquidity so that it can come and take it. So you can see this was where the market came in and market tapped into our zone, this green zone. It tapped into it. Market pushed up and then came down again. Okay. So I think I need to reduce the thickness of this, my cursor. Let me reduce it. Let me reduce the thickness. Maybe I should set it to 2. So let me just delete this one first so that you get the clarity in what happened. So market push down here, tap into our zone. Our eyes are ready now to start monitoring what is happening. It pushed up. We want a change of character after tapping into our zone, a change of character. If you don't see the same thing that happened here, we want to see it happening when it taps into our zone. So it came down and tapped into our zone here, and then it pushed up and then came down again. It tried pushing up, it came down again, it tried pushing up, it came down again. It could not go below this point. Then it began breaking up again. This is where you are to take your entry. Where market failed to break a low after tapping into your zone, it failed to break a low that was formed, and then it reversed and started breaking upwards. It has now aligned with your higher time frame of 4 hours, showing you that we are in an uptrend initially. Okay, so this is where you take there's a change of character. This change of character after tapping into your zone is what we were waiting for. This is where you will take your entry. Okay, this is where some assets immediately this change of character occur. The market makers know that people are waiting for a pullback. Okay, sometimes it will form a fair value gap for you here. You wait for it at the fair value gap, but then the distance is not much. This is where you take your entry. You go for a buy when this has been broken. Any candle that breaks above this, you take your entry here. Your stop loss is going to be below this low, below this low. And your TP is going to be the next highest point on 4 hours. The highest point on 4 hours. So let me show you the highest point on 4 hours to clear the high. So let me go back to the 4 hours time frame. Let me reset this to go to the 4 hours time frame. Now your next target is going to be to clear this high, this particular high that was formed. So you want to clear it. That is how you trade these things. So that is how. So I expect that this market should go to clear this. One thing again with this thing is a trend may not continue forever. So even though you are expecting that market should keep going in an uptrend, the way you have seen it, it goes up like that. It may not always continue like that. So when you see that you have reached 1 to 2 risk to reward ratio, take 60% of your profits. So it means you are going to take partial profits and then you allow the remaining ones to run. So even if market comes back against you, you have gotten some profits already. But then you can allow this market, since it's a trend, you can allow it to keep going because it can break this, it can reach this point. You started buying here, it can reach this point, it will break it and come down again and continue breaking it and be going up. So you can hold the remaining one like that and just be trailing behind it once a new high has been broken and the market retraces. You look for another entry, go in and be riding the trend like that. So you could see that from 4 hours, we drew our demands on market, tapped into it. We looked for a change of character upon tapping into our demand zone on 15 minutes. And we are to ride this market to keep going until it clears this high. That is what is happening. That is what is happening. Now, if you have any question regarding this strategy, this is for a demand zone. For a supply, is the same principle, just that you wait for the market at the points where a supply zone is happening. You wait for it where there is a downtrend. So you look for a downtrend. Let me show you if I could see a downtrend because this is an uptrend. Good. So this is a downtrend. Okay. So in a downtrend, you are seeing the market is falling, it goes up, it falls again, it goes up, it falls again. So it's the same principle. Each of these swing highs are your supply zones. So for a sell, it is a supply zone. Each of these rectangles that I'm doing, they are supply zones. So even here is a supply zone. So you wait for it to see that where market reverse, if you have drawn market tapped into this, you will now go to your 15 minutes and look for a change of character. It's the same principle. And when market taps into it, look for a change of character and sell it until you clear this low. And like I told you, market does not continue to trend forever. So you could see that this particular point was not cleared. So if you are taking your partial profit and this market reverse back again, it will hit you, but you have taken some profits. It's not going to give you any loss again. If you don't know how to take partial profits, a video is going to appear right now at the top right hand corner where you can see how to take partial profits as a beginner. So you will see from here that market changed the direction and started an uptrend. So you will now switch and be drawing your demand zones instead of supply zones now. If you have any question regarding this, just let me know in the comment section. Do have a wonderful day. Bye.